Module Overview. This module focuses on the strategic financial understanding, investment pathways, and analytical tools required to make profitable decisions across different types of real estate. Whether you are dealing with residential rentals, commercial property acquisition, industrial warehousing, or undeveloped land, a deep understanding of investment theory, risk management, financial modeling, and performance evaluation is essential. Module 7 is designed to help you master how to approach real estate as an investment vehicle, exploring both short-term gains and long-term wealth creation, along with the capital structure, financing options, profitability metrics, and exit strategies for each type of real estate. This module will help you distinguish between active and passive investment models, assess leverage impact, apply valuation techniques, and understand return on investment, ROI, internal rate of return, IRR, net present value, NPV, and cash-on-cash return across different real estate assets. It also provides insights into investment cycles, market timing, liquidity constraints, and taxation implications to help both beginners and advanced practitioners make informed and strategic investment choices. Introduction to Real Estate Investment Philosophy. Real estate as a tangible asset and income-generating investment benefits. Inflation hedge, passive income, appreciation, tax advantages. The dual nature of real estate. Use value versus investment value, core versus value add versus opportunistic strategies. Buy and hold versus fix and flip versus land banking. Investment characteristics by property type. In this module, we will be using property type, capital requirement, cash flow stability, risk level, and investment horizon in our table. 1. Residential low to medium moderate to stable low to medium short to long 2. Commercial medium to high medium to long 3. Industrial medium stable medium to long 4. Land variable no cash flow. High long-term financial analysis tools. Net operating income NOI. Gross income minus operating expenses. Cap rate NOI divided by property value, used to compare return across properties. Cash-on-cash return. Cash flow divided by invested equity, IRR and NPV, projecting long-term profitability and discounted future returns. Break-even ratio. Determines when a property starts becoming profitable. Sensitivity analysis and stress testing assumptions. Financing strategies and capital stack. Equity financing versus debt financing. Mortgage options, fixed, variable, interest-only balloon, commercial versus residential loan structures. Mezzanine debt and preferred equity leverage impact, debt-to-equity ratio and its effect on ROI risk of over-leverage, foreclosure, credit risk, liquidity crunch. Residential investment strategy. Rental income and occupancy rates, multifamily versus single-family homes, short-term rentals, Airbnb model, versus long-term leases, tax deductions, mortgage interest, depreciation, repairs, using REITs and crowdfunding to invest in residential property. Commercial real estate investment strategy. Triple net, NNN, leases and long-term tenants. Office buildings, malls, hotels, co-working spaces, market analysis, foot traffic, anchor tenants, lease escalations, CAM charges, common area maintenance, and tenant mix management, REITs, focused on commercial real estate portfolios. Industrial real estate investment strategy. Warehouse demand and logistics expansion impact of e-commerce and third-party logistics, 3PL, customization and specialization, cold storage, heavy load floors. Long lease terms and low turnover site selection near ports, airports, and highways. Land investment strategy. Speculation versus strategic acquisition. Agricultural, recreational, and future development land zoning analysis. Environmental studies and entitlement risk holding costs. Taxes, fencing, maintenance. Land flipping and value addition via subdivision. Portfolio diversification and asset allocation. Diversifying across real estate types and locations, balancing risk and return, correlation with other assets, stocks, bonds, domestic versus international property investment, REITs, ETFs, and fractional ownership models, liquidity planning and capital recycling. Exit strategies and investment timing. Sale versus refinance 1031 exchange, US-based, and tax deferment options. Sell and leaseback arrangements. Timing the market. Understanding real estate cycles. Recovery, expansion, hypersupply, recession. Identifying when to exit based on yield compression or market saturation. Learning outcomes. By the end of this module, you will be able to develop data-driven real estate investment strategies tailored to each property type. Apply core financial formulas for property analysis and performance monitoring. Identify suitable financing models and understand debt structures. Evaluate real estate portfolios through risk-adjusted performance metrics. Craft investment exit strategies aligned with financial goals and market cycles.